Good afternoon, ladies and gentlemen. Many of you have been with us all day, and yesterday it's been an exciting sequence of events here at the Peterson Institute for International Economics, but none perhaps so exciting as right now. Yesterday we had the Secretary of the Treasury of the United States, Jack Lew, with us. Today we are privileged and I believe about to be thoroughly informed by Guangyao Zhu, forgive my pronunciation, the Vice Minister of Finance of the People's Republic of China. Minister Zhu has been involved in China's international economic relations at the highest level for a long time. He graduated from the Finance Science Research Institute of the Ministry of Finance of the People's Republic of China. He's been a Director General of International Department of the Ministry of Finance. He was the Executive Director of China at the World Bank Group. He was Assistant Minister of Finance from 2007 to 2010. I should note that my predecessor, Fred Bergston, who we think of as Mr. APEC, had a counterpart in Vice Minister Zhu as Mr. APEC from the other side for a while. And we're now very proud to interact quite frequently with Vice Minister Zhu, both here and in China, as well as around the world, as he leads China's international economic diplomacy, its positive agenda for the G20 and for U.S.-China economic relations. He's also a very prompt man, so let me invite the Vice Minister to give his remarks. Thank you very much.
Thank you very much, Adam. And it's so great for me to be here today. I saw my old boss, former World Bank President Wolfenson there, and I hope everything you are well, and continue contribute to the world development and the peace cause. And of course, that's Fred Bergston. He educated me to understand what is the APEC, and with his help, we organized the APEC Center in China, and G20 also G7 issue. So we really appreciate this working relation with the Peterson Institute and Professor Lipso there, and really that's a long-term relation for his contribution to promote U.S.-China relation. We appreciate your contribution. Also appreciate very much your contribution to the global efforts to climate change efforts. I believe with you and others big efforts, so next year Paris meeting should be successful. And also David Dollar, and I know there's others, Bottlier, they are all World Bank China department head, and your contribution to the China development, we always remember that. And many friends here and media friends, I hope that we can have very frank change views to understand real situation, global economic challenge we faced, and also geopolitical challenge we faced together. And question, firstly, I want to report to you how we evaluate current global economic situation. Everybody know just 2 days before IMF that's downgrade global forecast for 2014 from July figure 3.4 to 3.3%, and that's a continual downgrade. I know we talk with IMF staff. They don't want that so many times change that forecast for 2014. But as a professional person, they must really reflect that economic situation now. And we say after 6 years of Lehman Brothers broken, financial crisis, some continue have this influence. Recovery of global economy is that's very slow, very uneven, very fragile. And we say we really face this challenge is economic growth, face this problem. And we must see the issue from structure of economy, and we must recognize there's a negative impact by the geopolitical. So we face that real challenge of global economy. That's number 1 point I want to report to you. And number 2 point, I still worry about very much after 6 years of financial crisis broke out. Global environment level still below the level 6 years ago. So fortunately, we see U.S. employment improved, and the unemployment rate last month dropped to the 5.9%. In China, from January to August, the new employment is 10 millions. So that's Chinese and U.S. contribute to the global environment improvement. However, there's a real challenge still exists. Global level unemployment is very challengeable. We see there's unemployment in Europe, particularly young generation lost job. That's a real challenge for social stability. And this issue reminds us why G20 must keep growth and employment as a key topic for this year again. And global efforts must be made to promote growth with real increase the employment. We must make extremely efforts to global employment improvement. Thirdly, we see, unfortunately or fortunately, that's your judgment, after World War II, after several business cycles, this time, be after 6 years since that international financial crisis broke out, global interest rate in the lowest level. And this we never see before ever time after financial crisis, so low interest rate. That's QE introduced in US is totally around 3.3 trillion, and QE in Japan also expansion money supply. And now US made very clear, Federal Reserve very clear point out that's absolutely this year to conclude QE, and next year we'll let this normalization of interest rate. We think that's communication between Federal Reserve and the market is as important, and let market really understand what's the situation and what will happen for the next Fed meeting. So that's very important in US side, make that transparency and make communication, particularly that's let that market understand what's the real policy adopted by Federal Reserve. However, same times we see that the ECB president, Mr. Draghi, made public announcement. Until middle of 2017, ECB will not increase the interest. So that's very sharp comparison between Federal Reserve policy and the ECB policy in the next 2 years. We really hope that the monetary supply and the policy to serve the domestic development purpose. And however, that's what real impact that we must very closely watch. And also President of ECB first time recognize the risk of deflation in Eurozone. So that's a new challenge. And 0.3, 0.4% of inflation indeed is too low. That's a deflation threat to the euro development. And how evaluate that interest trend in US, in Europe, in Japan, and in other places. And we should be very close to say, particularly spillover of some change of policy. So fourth point is that we really need technology revolution. So we can see the history after World War II. Every time business cycle is as a real boom of economy thanks to the real technology revolution. But now we look for breakthrough, and unfortunately not as complete, that's the whole process. And we expect the internet plus renewable energy can be that's real breakthrough. I think that's US, China, Europe can play the leading role in this regard, but need that more efforts. For other aspects, that should be more efforts, and we really hope that technology revolution can make the global economy really keep to the right track, growth on the right track. So final point I want to say about the global economy is that the role of US leading role. And we must recognize after World War II, the current global political economic system is established led by US. And also US keep this very important leading role after World War II, maintain this system until today. But now we can see US somehow want to give up some that's leading position. Both include global security order system and how to keep the system after World War II. That's politically. And economically, everybody knows that's economic order basically organized by IMF, World Bank, WTO. But unfortunately, we see 2010 reform agenda of IMF quarter and the governor's reform has not been approved by US Congress until today. US administration, yes, indeed, made this a lot of efforts, try to convince Congress approve, but unfortunately, until today, 2010 governor's reform and the quarter reform of IMF still not approved by US. So we really appear that US Congress can soon to approve that and let IMF quickly move to the realize the reform agenda. That's very important. We are very happy to see US economy back to the right track. And we really look for US can honor the commitment of leading role in the international system, both in the security and economic. This is very important for all the countries following the political economic order established after World War II. This is my first category comment about the global economy and the challenge we faced. My second, I want to report you about our thought regarding economic relation between China and the United States. We do believe now it's a so close interconnection between Chinese economy and the US economy. We don't think that 520 billion trade volume every year, or more than 100 billion investment each other, it really reflects that's the whole picture of economic relations. That's indeed so close connection between China and the US. It's already in the ever field. It's so connected, and that's so important relations. We must value that, and we appreciate very much U.S. business society strongly support development of China-U.S. economic and comprehensive relations. We know there are concerns. We also know some key progress we must together to make. One issue is the bilateral investment treaty, BIT, and thanks to the Sunnyland meeting between President Xi Jinping and President Obama, both of presidents reached that important consensus. China, US will jointly launch the negotiation on BIT based on pre-establishment plus negative list. So that's a so important decision, and so welcomed by both countries' people. And as a big achievement of last year SED, and now both sides have that very deepening 12-round negotiation. I'm very happy to report you so far the text of treaty already made big progress on clarification. That's both sides to compare each side's text, and big progress be made. Based on the agreement by this year, SED, from beginning next year, both sides should offer the negative list for real negotiation. And now that's real challenge is that's how high standard negative list, and short, but that's real reflect that's each country's concerns. And for China, to be honest, we face that real challenge domestically to cut long list of negative to the short with high standard, high quality. That's a real challenge. But we understand this is need to promote domestic restructuring. Of course, through the negotiation, that's both of American and Chinese is a tough negotiator. And in the table or during the process of negotiation, both sides should be a very tough negotiation on the list. We really hope with high standard, high quality as a core, and we can both sides set up the framework for complete the bilateral investment treaty negotiation. And also for climate change cooperation, energy, environmental cooperation, we have this big potential. Just not long time ago in New York, President Obama meeting with President Xi Jinping, Special Representative Vice Premier Zhang Gaoli, and both sides emphasize how important China, US to work together to deal with the challenge of climate change. We hope that real discussion can be made more understanding and to promote global efforts to deal with the challenge of climate change. And we do hope both China and the US as the largest developing country and the largest developed country can really contribute independently to the next year important Paris climate change meeting. And for more trade promotion, and China, U.S. have this big potential. We can see that China is this place U.S. export to increase this volume quickly and largely. We really hope that China-U.S. trade relation be more enhanced, and we particularly welcome that more high-tech product can be exported to China. And we also would like to see that reform the procedure of control of high-tech export to China. And we also see the big potential for cooperation in the energy side. And we can recall the July SED. Both sides emphasize in the energy cooperation between China and the United States. Shale gas is one area. LNG export to China is also connected. And now we are very happy to see that the private company plays a more important role to promote that. And in this regard, I particularly would like to report you, and within the format of G20, China and the United States jointly announced to have this peer review on fossil energy subsidy issue. That's only, now it's only 2 countries, but we hope that more countries will join. And this is very important. And for fossil energy subsidy peer review is that really regarding rational the price of energy, also can directly contribute to the climate change issue. So, and now in G20, that's China, US have that good coordination. We hope that more members will join with that G20 efforts, and globally we work together. So we see that in US, we see very happy IMF just a few days revised that forecast for US economy in 2014 from 1.7 to 2.2, 0.5% increase. That is on euro. And we also happy to see that IMF unchanged. That's the forecast of China for 2014's growth is 7.4%. With this calculation, we can see 2013, that's globally total GDP volume is as 73.9 trillion, and China is 9.2 trillion. US is 16.7 trillion. So China's total GDP to the global total GDP is 12.4%. US GDP to the global GDP is 22.7%. Regarding this contribution to the new growth, China this year, if according to IMF, 7.4%, US 2.2% growth. And that means China will contribute to the new growth for this year is 27.8. US is 15.1. So that's the 2 largest contribution for the new growth in the world. Now G20 is talk about for 5 years additional growth 2%. And we really hope that China, US can contribute with our real capacity. We also encourage other members to contribute their restructured reform to the global growth. Now, according to category and trade, investment, employment, competitive, That's the full category to calculation of new growth contribution. We believe China in the next 5 years for new growth of 2% additional is at about 30 to 40%. That's really in line with the current contribution for China to the global new growth. We hope that the U.S. will be more productivity improvement and more growth, and then we welcome U.S. contribution beyond China. And we really hope that both of our two great countries that work together to contribute to the world growth, and that's very, very important. We look forward to see next month President Xi Jinping and President Obama very important meeting in Beijing. Last year in Sunnyland, two president meetings made China-US economy to the highest level never before. But we also recognize this year something happened, and we need that momentum rebuilding up. We hope that China-US relations with real trust and will contribute to the global peace and global development. We know how challenging the situation economically we faced. We also understand how challenging the geopolitical risk we faced. And we need China-US that's more closely connected. And Adam gave 30 minutes, only five minutes left. I want to very briefly report to you about Chinese economy. And you know that since last year plenary meeting, we organized comprehensive reform led by President Xi Jinping himself. And that's the first time China advanced reform with economic, political, social, culture, and eco-knowledge. So that's comprehensive reform. Now, we must step by step to advance reform with this legal base. Now, just this month, 20 to 23rd, we will have another very important plenary. We'll have focus on rule of law building up. That's very important. And reform agenda is very clear, and now we want to make every reform is based on the rule of law. And in a year, we have introduced gradually some reform, including important household registration, 户口 reform, fiscal financial reform, and education system reform. This already been published. So now we just go through the administration method to promote those reform, and we will see more reform with following year. We have this timetable with year 2020, and we also have this stage period for real progress be made before 2016. So now this task be divided to the more than 300. So we have this every ministry or department really in charge of reform, but that's overarched by comprehensive leading group. And you can see that's so important reform just on the way. We really hope that the target mission set up by Communist Party Central Committee to the 2020, our GDP growth will be doubled in the level of 2010. And to the 2050, will establish China, build up China into the real comprehensive, real health country. That's realized, that's modernization. That's two stages that's very important, lead to the Chinese people realize the China dream. So that means that everybody enjoy the bright future and better life. Thank you very much.
Didn't mean to rush you. There's time.
Yeah, that's. Yeah.
Amplification. No translation. You need no translation. So thank you very much, Vice Minister Zhu. A truly epic and constructive talk. What should be done for rule of law in China? What can be pursued bilaterally between China and U.S.? The goals of climate change, avoiding it, mitigating it, the role of the U.S., calling on the U.S. to do its job in terms of IMF and governance reform, which certainly all of us in this building have long called for, and the whole growth outlook of the G20. So there's so many things to talk about. Before I open it up to questions from the floor, let me pose two things, if I could. So first, you mentioned the progress in the bilateral investment treaty and your hopes for changes in some of the export requirements from the U.S. in terms of high-tech trade. We have a new study coming out next week by Fred, Gary Huffbauer, Sean Miner, in which we're setting out an ambitious roadmap, or at least the three authors are setting out an ambitious roadmap for U.S.-China relations on trade. How far do you think the bilateral investment treaty can go? I mean, realistically, where do you think the impact's going to be over the next couple of years? Will it be mostly in terms of U.S. investment into China? Are you hopeful that people in the U.S. will become more receptive to Chinese investment the way eventually U.S. got accustomed to Japanese investment? Is this going to affect the investment patterns in third areas like Africa over resources? Do you think that the understanding of each other's views will be better as a result of this? I mean, I think we're very sympathetic to the idea you focused on this, but I'd like to hear a little more about why you feel this is important.
Thank you very much about the timetable for BIT. Now both sides make that very close communication and very good development.
Yep. Fine.
Very good development is that we have big progress on text of treaty clarification. And both U.S. official and China think that's real progress. But now that's key text is early of next year. Both will offer the negative list.
Right.
So we hope that should be high standard, high quality. If with that and after tough negotiation, we hope if that's possible with that 2 years with the Obama administration as a legacy can be left. But we also know that the treaty needs that big majority of senator approval.
Right.
That's 67 members of 67 members Senate approve. So in China side also need approval by Congress. So if we just try every effort to conclude with 2 years and leave that as next administration for U.S. side. So, but we subject to the real discussion and the real negotiation. We really hope that's a good preparation for President Xi Jinping, President Obama meeting, and made both presidents can give that clear instruction to the professional team to advance that negotiation. That's on BIT. For broad cooperation, as you said, that's possible in Africa. We welcome that idea. Actually, we already touched upon that issue in the third place, and particularly in in Africa, China, U.S. work very close cooperation. That include infrastructure. Now we discuss with the U.S. official regarding Power Africa, and also now that's in the West Africa faces a big public health crisis, and China, U.S. how work as contribution to the public health crisis. This is very key, and we hope that China, U.S. can very closely to connect that, make that real contribution to the process.
Well, thank you. A second question, which you sort of touched on, but if I could, I'd like to get you to expand on a bit, is that you mentioned the G20's ambitious growth goals, and that China and the U.S. are the only ones that seem to be on track. One thing which we've been hearing a lot already this week, including from Treasury Secretary Liu yesterday, I was at the fund earlier today with Managing Director Lagarde. Everyone is talking about some sort of major initiative on public investment, on infrastructure. Is this something that you see at the G20 or the IMFC? I mean, is this something that can be achieved through international cooperation, or is that secondary? And how do you feel about everybody in the world trying to come to China and saying, give me your money, give me your money? That everybody wants a Chinese investor for their public investment, I mean, or a Chinese partner. How do you see that playing out?
So that's for global investment in infrastructure. That's a very key topic of both G20 and APEC. We hope that China will host the APEC summit, informal leaders meeting before G20. And one important topic is connected with the investment. Of course, that's trade, because there are two wheels of APEC. And in Australia, G20, also that's a very key topic, is investment in infrastructure. We really hope this year we can make tangible progress in the infrastructure progress. And now regarding how make that rational money allocation, one thing is World Bank infrastructure facility, and both China and the US support that. And we really hope that boost that facility and make that global money for investment in infrastructure can be strengthened. And China have that proposal to establish Asian Investment Infrastructure, Asian Infrastructure Investment Bank. Also, Australia, they give us a proposal to establish a center for promote infrastructure development. Those all proposals connected with this infrastructure investment, because we all recognize there's a big gap between demanding for infrastructure development and financial supply to support infrastructure development. We hope that such kind of big progress this year can made, but we also understand some that policy communication is also very important.
Okay, great. I'm tempted to go on, but we have such a distinguished audience. I want to give them a chance to speak. Just to recap the ground rules here at the Peterson Institute, we have a roving mic up front, which Chris is holding. We also have a standing mic at back. When I recognize you in either place, you please feel free to ask a question. Please make sure to at least pretend you're asking a question, not making a speech, and please identify yourself where you're from. So if the lady at the back mic goes first, and then the woman in the orange dress or just in sweater right there.
Thank you very much, Vice Minister Zhu. What I wanted to ask you was...
I'm sorry, who are you from where?
Sorry, I'm Meg Lunsager. I was the U.S. Executive Director at the IMF for the past 7 years, spending a lot of time on issues of global growth, economic recovery. And one of the things that we always focused on is how to improve domestic demand generation in countries. And of course, in China, the domestic demand emphasis has been on investment, and of course the theme of the IMF, and I was at the seminar this morning, Adam, on the infrastructure investment. But if you're talking also about the long-run development of China and the long-run well-being of its people, you need to focus as well on the consumption side. And China's getting to be such a big economy, ultimately that domestic demand generation is going to have to be the main source of growth, not the export side. So what I'd like to ask you is, do you have policies in mind for promoting that shift from investment from export-led growth to more domestic consumption, which ultimately would be a benefit to the Chinese people and, of course, to the global growth as well? Thank you.
Thank you.
Thank you very much. That's a very important policy issue for sustainable development in China. And now we are just in the deepening process of restructure reform. That's one thing is that we must strongly promote domestic demand. Also, we should handle the balance about supply side. And we face that challenge over capacity, but we must emphasize that improve productivity issue, also make that balance between domestic demand and investment. That's very key for Chinese economy, keep that sustainable development. And now we made this big efforts for improvement of balance sheet. And 2007, we have this imbalance of balance payment is 10.1%. This year, first half of this year, is just 1.8%. That's a big change on that balance payment sheet. And so you can, that's big efforts already made in China. And also, first half of the year, our service industry contributed to the GDP growth is 46.6%. First, that's beyond that's contribution by the industry, second the industries. So we must continue make this rational structure of economy, continue development that's service industry, but that's we pay attention to the Peterson Institute research. Development service industry, we must emphasize quality. And because that's indeed, the service industry really contribute to the employment improvement. But however, the gap between income somehow is that big. Financial industry and the shoppers. So such kind of report really we draw lessons from this Peterson Institute paper. And now we must extremely efforts to promote restructure reform, including to deal with the challenge of overcapacity issue, including industry, steel industry, cement industry, glass industry, and those issues we must take very serious attitude to talk and to real deal with this challenge. And next year, I believe such kind of reform will be more deepening because that's ordinary Chinese people's demand for much improved quality of life, including clear air, and they want to enjoy this green mountain. So that's real demand by ordinary people. That's not just like that several years ago, everything emphasized on GDP and how high, more than 10%, but unfortunately we paid big cost on environment. So that's President Xi put top priority is that to in line with Chinese people's demand with a better life, including the real clear air and clean water and the environment issue. Thank you.
No, thank you. China's green dream articulated. Please.
Thank you. Leah from Voice of America. Vice Minister Zhu, according to the IMF, based on the purchasing power basis, China is actually surpassing the United States as the world's biggest economy. I wonder if you're happy to hear about that, whether you agree with that. In April, when the International Comparison Program came to the same conclusion, there were indications that China tried to suppress that report. If that were the case, can you also tell us a bit about why China is reluctant to get that, to be the #1 in the world? And if I may, a quick follow-up. To many people, the Chinese property market is overbuilt, overpriced, and over-leveraged. Is the Chinese property market wobbling to collapse? Thank you.
You're allowed to answer that with a yes or a no if you want.
Two issues. First about PPP. And very frankly, I want to tell you the truth. I think that outside people is more than Chinese domestic people is more serious about the World Bank report. I think that's not the IMF, that's World Bank report about PPP. IMF also see that, and but anyway, that's my judgment is outside people is more serious than that's domestic people to say that China is beyond U.S. as #1 economy, because we really understand there's a gap in quality of GDP. And we don't just say GDP per se, we see there's a real quality of life. And we see we still have this big gap. China is still developing country. And one gap is the environment. And for last 35, very quick development. Certainly Chinese economy is 9% to 10% growth, but we really pay the cost, particularly in the environment side. Now, why President Xi particularly emphasized that's important for environment issue and make this wish of people, so that's we understand. Again, we must emphasize China is a developing country. We know there's a gap. We are never, there's optimism for the progress already made. We continue make this big reform and opening up policy, make this Chinese economy with growth, with real quality. And we will make this Chinese people enjoy this much better life. That's the wish of Chinese people. Second issue about the real estate market. Yes, now we face some that's new challenge, because before every year is just say how to control the price of housing or real estate. But now we understand that we must let this market play the role, and maybe too much control and make this problem more serious. And now we see that's the first time let this market play the role, and how market real action we will see. We need some time to see. But in generally, we think that the Chinese economy keep this stable development, including real estate market. But that the market play the role, fundamentally, that's need a little time to show that result.
Terrific, thank you. So at the back, then in front here, and then the lady there, please.
Thank you very much. Krishna Guha, Vice Chairman of ISI, an independent broker-dealer firm here in the US, and a former member of the Management Committee at the New York Fed. So I wanted to ask you about recent currency developments. As I'm sure you're very much aware, the strengthening of the dollar in the last several weeks has also resulted in a significant strengthening of the renminbi relative to the euro, relative to the Japanese yen, and so forth. And I wanted to ask you, first of all, is this appreciation of the renminbi problematic with respect to the cyclical position of the Chinese economy? And secondly, if we were to see very substantial dollar strength going forward over the next several years, given the trading relationship between the renminbi and the dollar, how do you think you and your colleagues would approach that?
That's the exchange rate issue. Is that one of agenda of Chinese reform. We are formally advanced exchange regime reform. Last March, China expanded that band of floating from 1% to 2%. That's together, because that's a positive and negative 2%. That means 4% daily floating range, and that's a very big range. And very frankly, China, US keep this policy communication under SED, particularly Treasury and with us. So we are very frankly change that view. And they understand that's 4% float, that's daily is that's a big one. And US side oftenly repeat that's concern about renminbi low value. But very frankly, recently, Secretary Jacob Lu and Vice Premier Wang Yang have a phone call. I can report to you, U.S. position is that welcome after last SED in July, China let renminbi float with the market trend, and basically not that sterilization and no intervention. So that's why U.S. dollar strong. Now is that index rate is 86 points. That's Chinese yuan still appreciate. Now is that 6.15. That's strong, and also we understand the Japanese yuan is near 100, and the euro also lower. So that's. But anyway, we would keep that very close communication, and we will continue our reform. But globally, that's G20 policy coordination to the macroeconomic policy become more important. So we don't know if that's growth rate to the 3.3%, particularly trade only 3.1%, how to deal with this challenge. And we hope that all members take that responsible way to handle this issue.
Thank you very much.
Thank you. Here in front to Fred, and then to the lady at that table.
Fred Bergston here at the Institute. Mr. Minister, terrific to see you again, and thank you for visiting the Institute. You stressed in your remarks the potential for greatly increasing the trade and investment relationship between China and the United States. Adam mentioned that we're about to publish a study which has the very ambitious goal of suggesting that the two countries start talking about the long-term possibility of a free trade agreement between our countries. We know it's a long-term proposition, but we think it's time to start thinking about it, and we spell out why that is. Two questions to you. One, from a Chinese perspective, do you think it is worth starting to consider a far-reaching possibility like that, either through bilateral negotiations or possibly through extension of the Trans-Pacific Partnership to include China? And then the second question is, how do you see the economic reform program of President Xi Jinping relating to trade issues? Would the kind of reforms you have in mind permit greater trade liberalization, and might they even be promoted by trade liberalization the way that President Jiang Zemin, Zhu Rongji 20 years ago used the entry to the WTO to promote internal economic reform in China?
Can I just point out Fred, Gary, and Sean's study, which again we are releasing next Thursday. It represents one path. Not all of us here necessarily think we should be leaping directly to an FTA, but I do want to emphasize in particular one aspect of Fred's comment, which is a number of us here as well, besides those authors, including Jeff Schott and myself, have come out very strongly that there should be efforts made to get China involved with the TPP negotiations to increase the transparency of TPP. And that's obviously going to be, at the same time that President Xi is going to be dealing with APEC, President Obama is going to be dealing with TPP. So I was this fall. So I was wondering, picking up on Fred's sort of long-term view, if you could also say a couple things about how you see TPP playing out in China's potential role.
Thank you. And Fred, and firstly, I know your view, strategic view, and to promote that long-term relation for Chinese-U.S. economic relation and also comprehensive relation. Your proposal, your policy suggestion for the free trade zone between these two largest economy, personally, I welcome that, and I do believe we need doing something that's regard. We know that's a long-term view, but that's very important. We take this serious consideration. Why TPP, RCEP, or TTIP, and can be really in place. Not that include that Chinese and American work together, and because we do believe that two countries, great nations, great peoples, can more with this innovation and more focus on the development and better life for both of Chinese and American. We welcome that, and we know that's a strategic view and need that long-term strategy to design. And specific issue, firstly about TPP, and secondly about trade issue. Actually, these two issues is very closely connected. I think that's under the leadership of President Xi Jinping, China that's very open to the global economy. President Xi said reform and opening up never stopped, and we must keep going on the way. So that's very clear signal, and for Chinese staff is instruction. We must promote domestic restructure reform, and we must keep this door, China door more open up to the outside. That's very clear. That's the policy of President Xi. And particularly for TPP here, very frankly, US internally have this debate, and China will also have debate. But I can report you now after this debate, as a position is very clearly as opening up policy and opening up economy, China should integrate it with the global trade system with high standard. And now we understand US wants this firstly conclude TPP with this 12 members and not open to any new members. But we also said very clear that's not including China, that TPP is not incomplete because so large economy in Asia and the Asia Pacific cooperation, very frankly, China, US is a very key player. And we want to see that's real development TPP here. We want to see Chinese economy will more integrated with the global system. We also welcome that any new proposal for US side to China, and we work together to promote trade liberalization in Asia Pacific area, also in the global. So that's very important. Also, in China side, we have this RCEP talk. That's 10+6. That's ASEAN, 10 ASEAN members plus China, Korea, Japan, also Australia, New Zealand, and India. So we hope that something can be more connected. And we understand it's very key, it's a high standard. And indeed, we welcome this high standard agreement, and we hope that more integrated regional cooperation can benefit our member countries. And this connects with the trade. So I believe that President Xi Jinping, I think that's a very, very clear instruction and to the domestic staff, and also very, very clear signal to the outside. China is more open, both in trade and investment. For we will import more and we will continue export. And we will welcome FDI to China. We also encourage Chinese enterprise have business in outside of China. Thank you.
It's a great vision. So the lady in the white jacket, and then two questions at the back, Mike. Thank you for going on and taking all this. This is wonderful. We didn't quite have this many Q&A yesterday.
Hello, my name is Victoria Guida. I'm a reporter with Inside U.S. Trade. You mentioned the importance of technology to economic growth, and so my question is about the Information Technology Agreement. Specifically, it's the U.S. goal to try and conclude the expansion of the Information Technology Agreement by APEC next month. So my questions are, first, is that China's goal as well? And second of all, is China interested in showing more flexibility? Is the U.S. showing more flexibility? How realistic is that?
I think that's ITA that's a very important agreement, and in the world, we look for WTO play the important role. We encourage multilateral system play the important role. But unfortunately, we see some very difficult in the process. So this one, ITA, and we really hope that we can work together with US, with other members to have this timely deal on that. And very frankly, every members already made big efforts. China as a developing country, I think that we do extreme efforts according to our real capacity. Now that's very, very close to the final deal. But this time, and I hope that every side show the flexibility, and because big portion already agreed by everyone, and just a few products. So that's in Chinese word. That's if you want that keep that melon, you want that you must leave some small one away. So that's the final judgment and final stage, and we hope everybody hope before APEC meeting that can be real deal, but that's subject to every members. So again, China is a developing country. In this process, China made extreme efforts. Thank you.
Thank you. At the back, Mike.
Jacob Kierkegaard from the Peterson Institute. Thank you very much, Mr. Vice Minister. I'd like to ask you a sort of broad question about debt, because I think it's one of the most hotly contested issues in the advanced economies during the crises and certainly the recovery period of it. And I guess you could say, well, some choose to emphasize government debt, some terms private debt. And there's a lot of contention about this ironic outcome that you sometimes need to get into more debt in order to get out of a debt crisis. What is the Chinese government perspective on that? Obviously, the Chinese government owns a lot of government debt from other countries. But more importantly, at least some of the metrics that I've seen suggest that you've had a very rapid buildup of debt in the Chinese economy as well. I mean, some that I've seen suggest that debt grows by 3 times the rate of GDP in China and have done so for some period. Is that a problem? And if so, what can be done to fix it?
Yes, that's a shadow bank issue. Is a very key issue in FSB discussion. That's a global issue. And this year is very key issue discussed by FSB. That include other two is that's too big to fail, and derivative issue, cross-border derivative issue. So that's we know that's a shadow bank issue is a challenge, including that's a challenge to China. Very frankly, we see that issue in China mainly focus on trust fund. So not too much amount. But that's increased amount last several months. So that's why we take serious action to deal with that. And now local financing vehicle is very strictly controlled. And just weeks ago, Congress passed the budget law that's opened the front door for provincial government can have right based on approved by state council to borrowing debt. So that's the first time that's make that in budget law. So we hope through the open front door, close the back door to deal with that challenge. And the principle is that we take this risk control to consideration of moral hazard issue, but simultaneously we must avoid regional and systematic risk in the financial system particularly. That's the principle. We must be very, very carefully balance that. We believe so far we balance that basically well, and that issue is under control. But we know the risk of shadow bank continue, so we must continue monitor that with very serious way.
Can I just follow up on Jacob's question and your reply in just one way? I mean, one of the things that a number of us working on financial regulation issues here worry about with the FSB process is that there's a tendency to view every financial institution as a bank, or at least treat it as a bank, whether or not it's a bank. And that there has been a sort of one-size-fits-all process in terms of what works for the UK and Frankfurt and New York works for everybody. Now, on the other hand, and Governor Mark Carney, for example, would say, well, there's good reason we're doing that. We want standardization, we want high standard, and if you don't get everybody under the tent, you'll just get more shadow banking. But can you say a little bit about how satisfied or unsatisfied you are with the FSB's approach to including people beyond Frankfurt, London, and New York, and how they're handling diversity of financial institutions?
That's a very important issue. That's not only FSB issue, but also G20 issue, because that's the final report.
Right.
FSB should submit to the summit for approval. That's the real document of summit. So that's so important for FSB role. And now, indeed, inside of FSB have some debate. So that's I just mentioned that 3 key topics is agreed by all members of FSB this year.
Right.
That's too big to fail.
Right.
A derivative, cross-border derivative, and the shadow bank issue. And now that's one that's, yes, chairman particularly, but that's tightening supervision, and but same time he wants to show some that's flexible way to developing country. And but I can report you in China we are most seriously implement the Basel III and early than other some developed country. So we welcome that strengthening supervision, and we also hope that more supervision can make that Chinese bank can more easier doing business overseas. So we have that good cooperation, but indeed inside of FSB some debate.
Great.
But in generally we support FSB.
Got it. Thank you very much for clarifying that. The lady at the back mic, and then the gentleman in the light suit here. Yep.
I'm Jennifer Lee with Hong Kong Phoenix TV. Thank you for your speech, Vice Minister. I have a question regarding China's recent anti-monopoly efforts. So it is said that the U.S. Treasury Secretary Jack Lew wrote a mail to his counterpart, the Vice Premier Guangyao, saying that this investigation will have serious implication for the U.S.-China relations. I wonder if you can comment on that, or is there going to be a discussion between you and Jack Lew? And I also wonder, do you think why the Chinese government officials has stated many times that they don't target the foreign companies, it's just account for 10%, but the U.S. still respond negatively? And do you think what impact it might have regarding the U.S.-China relations? Thank you.
I can report you under SED procedure. Both Vice Premier Wang Yang and Secretary Lu, as a special representative for President Xi Jinping and President Obama, they keep very often communication with letter or phone call or meeting, and everything they can put on the table for frank discussion. Of course, include anti-monopoly issue. You can recall last Sunday, Vice Premier Wang Yang and Secretary Lu had this phone call conversation and discussed this China-U.S. economic relation and the global economic situation. Certainly, that's everything covered. I believe that with this SED procedure, we can work together. I mean, China-U.S. can work together to deal with any challenge. We really hope there's more understanding, more trust for boost both sides investment in China and in U.S. by Chinese enterprise. So for specifically anti-monopoly issue, that's we very confirm that's principle agreed by SED in July. That's universal and standard principle, and certainly China is equally to treat domestic enterprise and foreign investment, foreign enterprise. And you can see there's detailed statistics, 71% survey is against the Chinese enterprise. And for American and foreign companies, we see same role and same principle. And both Vice Premier Wang Yang and Secretary Lu confirm that. And I believe that's such kind of very frank communication will continue with the SED format.
Thank you.
Great. Okay, so we have the gentleman here in the light suit jacket, then the guy in the white shirt behind him, and then back to the back mic.
Thank you. I'm Peter Bottelier. I'm teaching Chinese economic courses at Johns Hopkins SAIS. I got to know China in the early mid-90s, serving as head of the World Bank most of the time for Jim Wolfenson, sitting on this table here. My question concerns a topic that we discussed earlier, namely domestic debt management, particularly the government part of domestic debt. You mentioned, Mr. Minister, that the MPC passed a very significant budget law amendment in August. If I understood that amendment correctly, it opens the way to significant domestic capital market development in China, in the sense that local governments, provincial governments, will have the authority to issue bond debt instruments without central government permission. That is a hugely important capital market institutional development. And I wonder if you could say a little bit about it, particularly concerning the international aspects of that, because China is also in the process of gradually opening its capital account. And it seems to me that given the huge potential for the bond market development in China, if you were to open this up to international purchases, primary and secondary market, you have a very significant potential to open the capital market, while at the same time introducing control over domestic local government debt.
So can you put this as a question?
So the question is, how do you envisage that this potentially very huge domestic local government bond market will develop, and is there potential for linking it to international capital markets?
Thank you, Peter.
That's very important issue for us, and we must recognize that's less development of capital market. That's a constraint for rational capital allocation, and so far China still mainly rely on banking lending and banking borrowing. That's capital market that's less development. So we made every efforts to improve that, but capital market that's gradually matured, and how make that rational behavior for investors, and make that people really understand that's risk control. So we just very frankly in learning process, and this time that's Congress approved that's budget law that's indeed open some door for provincial government borrowing, and but condition is approved by state council, by central government, and this is very important step beginning. And next one we just say we just talk with the Hong Kong Exchange and make that Shanghai Stock Exchange with the Hong Kong Exchange direct connection, and now it's in the final stage. We hope that some experience will promote domestic capital market development. And we know that very important. But that's until today, that's capital market still less development. We need that's several levels capital market, and you're right, mentioned that's bond issue. So not only China and East Asia, with that East Asia bond initiative, we already discussed for several years, but that's still in the process to promote that.
Great. The gentleman in the white shirt.
Thank you, Minister. I'm Jin Ma from Tudor Investment. Very simple question. Do you think the growth target, GDP growth target, will be lowered from 7.5% this year to 7% in 2015? Thank you.
We see very clearly now we more emphasize this quality of growth rather than just the figure of GDP. And 7.5% growth is the indicative target this year, but that's anyway a little higher or little lower. That's with a real rational range. That's no problem. That's what is the test. Very key is that employment. Now we already have this less employment much improved. That's 10 million employment target already in August complete. So that's we have that confidence with the rational economic structure. That's GDP growth in China should be with that rational range. We are not chase that very high growth because that's pay big cost, particularly environment. But we also have this confidence with the next 10 years, potential productivity in China keep at 7 to 8%. Several reasons. One is that we reform of labor force, particularly urbanization, really release the labor supply and also very high domestic saving. And also we introduce mixed economy. Structural reform made that productivity improved. So that's why we have this confidence with the next 10 years with 7 to 8% growth.
You know, the Vice Minister has been incredibly generous with his time, with his frankness, with his answers. I know he's willing to go on, but I think after Bill we may make this the last question. So at the back mic, please.
William Klein here at the Institute. Vice Minister, in the reform process, I'd like to know what is your vision of the role of the state banks over the next several years. China's state-owned banks have a remarkably high 90% of the banking system. The good news is that means you don't have bank panics because people trust that the government's there to back up the banks. The bad news is the state banks have a bad reputation for channeling money to the special chums, lower interest rates for special clients, and generally are less efficient. So is there a plan over the next decade to reduce that 90%, say to 50%, case A, or is there alternatively a plan to maintain the state banks but to implement some form of discipline to increase the efficiency, case B, or some mixture of the two?
Yes, for that banking reform, we must say that's so far that's a very big five or big five banks in China. Yes, that's still dominate banking system. But this year we do extremely efforts on banking reform. You can see 5 private banking already be approved. We will introduce more as following up, but that's so far that's a new established 5 or approved 5 private bank is the real key for promote that's banking reform.
That was brief enough that we can probably get in one more question, if anybody. Yeah, right here. Wait, the microphone's coming to you.
I'm a business scholar at Science, Johns Hopkins, and also I teach at Wuhan University back in China.
What's your name, please?
Zhang, Zhang Xiaotong. My question is, Vice Minister just mentioned we need America as a leader in the world economy. But so far, we are a little bit disappointed seeing that the U.S. shies away from the multilateral trade negotiation, and also the Congress blocks the IMF reform package. You just mentioned that. So my question is, if the U.S. cannot provide the world leadership, where can we find leaders? Thank you.
But we really hope U.S. take this real leading role according to real capacity, because without that, I introduced you, U.S. GDP is more than 16 trillion and the largest in the world, and also that's a systematic building up. That's U.S. play really leading role. I don't think anybody can replace that. But the question is for U.S. Themselves, and whether Congress can see that's a real global picture and strategic view. We hope that's very quick, particularly for IMF reform is very important. That's U.S. interest, that's global interest, but very key, firstly, to U.S. interest.
Let me just piggyback on that a second. I think one of the things that the Vice Minister did in his opening remarks that I thought was very important, and I believe to be very sincere based on past conversations, is he framed a lot of the U.S. and global, U.S., China, and global issues in terms of the post-war system. That it's not just so much about a leader or that, as that there is an underlying system that we would like to see respected and maintained. And I think that that is actually a very useful way to put it, because if we frame it entirely in terms of who's big, who's leading, who's not, it makes it seem as though it's just a question of the generosity of the whoever happens to be in the lead at the time. Now, obviously, I'm not so idealistic. I don't think that plays a role, and I take a certain amount of pride that, at least for some decades, when the U.S. was so large, it was very generous and thoughtful as a leader. But its main legacy was to build a system of institutions, and it's not for me to speechify, it's for the true policymaker to speechify. But just to say that I and all my colleagues here at the Institute, I know we don't always agree on everything, but we very strongly echo the Vice Minister's call on Congress that the U.S. foreign policy leadership, economic leadership, and the good of the global economic system do depend crucially on the U.S. finally approving the IMF reform, and there's no good justification for not doing so. And again, we don't usually make statements, but we said this to Secretary Liu yesterday. We supported him pushing for that, and I support the Vice Minister. I think, again, it's not about we're passing the baton of leadership. That's there, but it's about maintaining the system in which we have a common interest. I hope you don't mind my throwing that in. All right. Well, the Vice Minister has been incredibly generous. I've said that more than once, in part because he has been so generous. He's given us so much of his time and his thought. He's masterfully handled questions across an incredible range that was even wider than the range of his initial talk. We are very grateful to have had him with us today during this very busy week, and we hope that this is a prelude to continued constructive progress in U.S.-China relations. Thank you very much.
Thank you.
Thank you for coming.
Thank you all. Thank you very much. Thank you.